include them.
We're going to let everybody filter in and then we'll get started. Hi, and welcome to TMC Connect. My name is Tony Bramley, and I'm the Director of Business Development here at the Mortgage Collaborative. Thank you so much for coming in today. We have our partners at Fannie Mae who are going to be talking about overview of the duty to serve rule. Just a couple of quick notes. You are on mute, but we do want this to be interactive. So please drop your questions in the chat or Q&A, and we will address those at the end of the presentation. And we will send a follow-up email tomorrow, and appreciate that you guys are here. So without further ado, I am going to turn it over to Sharmila.
Thank you, Tony. Hi, everyone. My name is Sharmila Srivastav, and it is my pleasure to introduce the other presenters, Artesia and Stephania. All of us are part of the affordable lending team here at Fannie Mae. As you can see the topic on the slide, we are going to provide an overview of the duty to serve rule and the underlying requirements, including the eligibility criteria. We do hope you find the session to be valuable. We would love for you all to take what you learned from this session and reach out to the underserved borrowers and find opportunities to serve underserved. Is my voice echoing? No? Okay, all right. Hopefully everybody else is on mute. Okay. So we are hoping this will enable you to find market opportunities that are available in today's market to help serve borrowers in these underserved segments. We value your feedback, and so at the end of the webinar, please make sure that you take a minute to fill out our post-webinar survey that will give us an opportunity to ensure that any future content is tailored to meet your needs. This slide, I have to read out this slide. While every effort has been made to ensure the reliability of the session, as Fannie Mae's selling and servicing guides and their updates, including the guide announcements and release notes, are the official statements of Fannie Mae's policies and procedures and control in the event of discrepancies between the information in this seminar and the guides. Next. As you can see, we have quite a bit that we'd like to cover during the session, but before we start the session, we'd like to get your feedback, a better understanding of how much you know about the duty to serve markets, and what are some of the lending activities that your institution is involved in. And so for that, Lori, if we can go to the next slide. So we would like to ask you to anonymously take a few poll questions, and you can see them on the screen.
Sharmila, can you see the poll results?
I cannot.
Okay. We will wrap up the poll in just a minute. Go ahead and give us your answers. Okay, I'm going to end the poll. So we have 100% manufactured housing, 100% rural, 25% persistent poverty counties, 0% Native American, 50% energy, 50% shared equity, 75% is yes for are you familiar with the duty to serve requirements, and 25% is no.
Thank you so much. That is extremely helpful for all of us. So, with that, I will turn it over to Stephania. Next slide, please, Lori.
Thank you, Sharmila. Well, as mentioned, we're going to talk about what duty to serve is and what it means to you. Thank you all for attending the webinar today. We hope this session will enable you or lenders to take advantage of existing opportunities to reach borrowers in these underserved market segments. Next, please. We'll give you an overview of duty to serve, the three markets outlined in the duty to serve rule, and some affordable offerings that you can support duty to serve lending. I'll start with talking about affordable housing. And we can go ahead and, okay. So let's start with saying what's duty to serve, right? Affordable housing is at the heart of our mission, and duty to serve is a core part of our affordable housing activities, driving innovation to create growth opportunities and help grow home ownership. And as you can see here, the three markets that we'll be talking about will be manufactured housing, affordable housing preservation, and rural housing. Although affordable home ownership has always been important to our work, the focus on these specific activities came out of the duty to serve rule, which was established as part of the Housing and Economic Recovery Act of 2008. It focused on opportunities in three housing markets. And as I mentioned earlier, is the manufactured housing, affordable housing preservation, and rural housing. Next slide, please. Every 3 years, we publish a duty to serve plan highlighting activities we will take to support home ownership in these markets. These activities generally fall into one of four categories: increasing loan purchase in these markets to ensure liquidity, engaging with experts and stakeholders to understand obstacles, creating products or programs designed to address those obstacles, and lastly, making target investments to grow and support business in these markets. Next slide, please. All right, so this work has really made an impact since we launched Duty to Serve in 2018. And since then, we have provided over 382 billion in liquidity in these markets, financed 3.4 million multifamily units, supported the purchase of over 250,000 homes, launched more than 90 research initiatives, and made more than 40 product enhancements to better serve these markets. Next slide, please. As part of our efforts to help grow this business, we also offer special pricing for loans that meet duty to serve requirements in these markets. Each market has its own requirements, but there are a few requirements that all duty to serve loans need to meet. To qualify as a duty to serve loan, as previously mentioned, the borrower on the loan must make 100% of the area median income or less. The property needs to be an owner-occupied primary residence, and the loan needs to be a purchase money or limited cash out refinance transaction. We can move to the next slide, please. The first market we'll cover today is manufactured housing, which is an important component of increasing the supply of affordable housing. Next slide. All right. We increase liquidity in the manufactured housing market by purchasing conventional manufactured housing loans, driving growth through policy changes, growing MH advantage through product development, research, and application in subdivisions, and by conducting industry outreach in a way that also addresses market needs. Next slide. We offer several types of financing for manufactured housing. Standard MH financing offers borrowers the benefits of conventional financing, like cancelable mortgage insurance, and temporary interest rate buy-downs for single and multi-width manufactured homes. MH Advantage offers financing terms more similar to site-built homes for manufactured homes that are designed to blend into site-built neighborhoods and meet additional aesthetic and construction requirements. Slide 12. To be qualified as a duty-to-serve loan, financed manufactured homes need to be titled as real property, have a minimum of 400 square feet and 12 feet wide. They also need to be HUD code requirements. This can include single and multi-width homes, and there are not any geographic restrictions on these homes, so they can be anywhere in the US. And this is a question that we get asked often. So there are not any geographic restrictions. And if you're using desktop underwriting or DU to underwrite these loans, it will let you know when you enter a loan that meets these requirements that it may be eligible for duty to serve. So keep that in mind. Next slide. All right, so we have worked to make manufactured housing more accessible with policy changes over the past few years that have made it easier for borrowers without credit scores to qualify for manufactured home mortgages, ensure proper valuation of MH Advantage homes by adding a requirement to use at least some site-built comps, and allow temporary interest rate buy-downs for manufactured homes. Thank you, Lori. Now I'll pass it on to Artisha, who will be talking to us about rural housing.
Thanks, Stefania. So today I'll cover a couple of additional sections of our duty to serve plan. I'll start out with our rural housing. Next slide. All right, so our rural housing mission is focused on increasing opportunities for sustainable home ownership in rural areas. We support rural housing by developing a pipeline of mortgage-ready buyers and building capacity for mission-driven lenders to serve markets traditional lenders may fall short in serving. Next slide. So while you might think of rural housing as an issue of location, duty to serve also includes several communities in this category. So when we talk about rural areas, we specifically are referring to Middle Appalachia, Lower Mississippi Delta, and Colonias. Rural tracts and persistent poverty counties. In addition to these regions, our rural mission includes efforts to better support Native Americans and agricultural workers, as well as small financial institutions that are integral partners to serving these rural communities. Next slide. So in addition to the overall duty to serve requirements mentioned earlier, rural duty to serve loans must finance properties that fall within one of the following categories. So it has to be within one of the three high needs rural regions, be a persistent poverty rural county, or serve a high needs population such as Native American or agriculture workers. If you have questions about whether a loan is in a rural area or not, a great starting place is the Fannie Mae AMI lookup tool. This tool can be accessed via desktop or mobile device and allows you to complete a simple search that returns both the AMI and duty to serve data for the area. And one final tip, if you're using Desktop Underwriter to underwrite loans in one of these rural geographic areas, you'll receive DU messaging regarding duty to serve eligibility for loans that meet these requirements, as well as our additional duty to serve requirements. Next slide. And then just as a quick visualization, we have a map of the US that shows the high needs rural counties for duty to serve. The purple region, looking in the southern region of the map, shows the lower Mississippi. The blue region in the south, extending from Texas to just about, I guess that's Arizona on the map, covers our Colonias regions. The green region captures the Middle Appalachia, and then the orange regions that are dispersed throughout the map represent our persistent poverty counties. Next slide. So next we have our duty to serve requirements for small financial institutions. These institutions have an asset size less than 304 million and must operate as a depository institution, credit union, or certified community development financial institution, or CDFI. SFI loans must be secured by a property located in a rural eligible area. And lastly, the loan needs to be originated, closed, and funded by the small financial institution. Next slide. So in addition to our marketplace activities over the last few years, I want to quickly highlight some of the other efforts that we've extended to support lending in rural areas. In December 2020, we did launch a research project to explore whether service learning programs can increase homebuyer readiness. In May of 2021, Fannie Mae's AMI lookup tool was updated to allow a searched area or address to be identified as rural or high needs rural region. And most recently, FHFA released a standardized definition of colonious region. And with this clear definition, we will be able to better focus on and support the unique needs of the communities along the US-Mexico border. Next slide. And then next we have the affordable housing preservation, which includes a few topics I'll briefly cover. Next slide. So our affordable housing preservation mission is to expand the supply of high quality, energy efficient, affordable housing. Some of our efforts in this space include promoting energy and water efficiency improvement in single family homes, increasing liquidity in the shared equity space, as well as promoting the purchase of distressed properties by owner occupants and mission focused organizations. Next slide. So duty to serve energy efficiency loans must meet at least one of the following requirements. So the loan must be a home style renovation or home style energy loan. This includes Energy Star certified improvements, be a refinance of an existing PACE loan, or be a home style energy loan that is projected to reduce energy or water consumption by at least 15%. Improvements in this case also need to exceed the cost of the improvements over the life of the loan. And another quick tip, loans underwritten through DU that meet these requirements, as well as other duty to serve requirements, will receive duty to serve eligibility messaging. And those can be found in your DU findings. Next slide. Shared equity programs like community land trusts need to meet a few requirements related to their legal documents and loans for properties they sell. They need to have a ground lease, deed restriction, or similar legal mechanisms that will keep the home affordable with an affordability term of at least 30 years. A resale formula that limits the homeowner's proceeds upon resale, and the program also needs to have a preemptive option for the or its assignees to purchase the home from the homeowner at resale, and a policy to pre-approve refinances or HELOCs. And lastly, there is a published certified shared equity program providers list on fanniemae.com, which can be used to find programs that meet Fannie Mae's selling guide and duty to serve requirements. Next slide. To support some of our work, some of our recent updates include the release of an energy efficiency best practice report, which provides information on how lenders and real estate professionals can help their clients. It addresses home energy and water costs through energy efficiency improvements. Recent policy updates include the allowance of home style energy loans, featuring Energy Star certified improvements to be combined with home style renovation, which can qualify the lender for a $500 LLPA credit, and then shared equity loans that are secured by properties subject to private transfer fees will now be eligible for sale to Fannie Mae if they meet certain requirements. Next slide. So while some of our duty to serve activity is tied to specific loan products, in a lot of cases, they can be supported by a range of offerings designed to make home ownership more affordable. So we'll spend a little time going over some of these products and resources. Next slide. So here you can see we have included a few of our affordable offerings to give you an idea of how you can create more options for home buyers. Our first two products are the 97% LTV and Home Ready. Both of these loan products allow for a down payment as low as 3%. One of the differences, though, is that between these two products is that while the 97% LTV is available for first-time home buyers, Home Ready is available to income qualified borrowers, whether they've owned a home or not. Next, next we have our MH Advantage and Standard MH product. Again, the MH Advantage offers financing terms more similar to site-built homes, and Standard MH financing offers borrowers the benefit of conventional financing like cancelable mortgage insurance and temporary interest rate buydowns for single and multi-width manufactured homes. And then we have our Homestyle Renovation and Homestyle Energy. These loans allow borrowers to roll the cost of home improvement into their mortgage. And the final affordable product we like to highlight is the HFA Preferred, which is available through housing finance agencies. It's similar to Home Ready, but offers some benefits and flexibilities that are unique to HFAs. Next slide. So a major barrier to home ownership, we all know, is down payment and closing costs. To help borrowers overcome this major obstacle, we do allow down payment and closing cost assistance. These funds can come from a variety of sources and cover all or part of the down payment. Programs need to meet some of the best practices requirements, which you can find in the Community Seconds checklist. We also have a search tool that can help you find programs for the borrowers if they qualify, or the borrowers can search in the tool themselves. You can find the tool at fanniemae.com/down payment. Next slide. So we are here to help. We want to support you and your business and provide tools that will enable you to better meet the needs of your borrowers. So in addition to some of the loan products, we do encourage you to check out our marketing center where you can find marketing materials for some of the loan products we just discussed. The materials there are customizable, so the loan officers can add their name and contact information right to the flyer they'll be walking their borrowers through. We also offer HomeView, a home buyer education course. This course walks borrowers through the home buying process and prepares them for everything from finding a real estate agent through closing on a loan and maintaining their home. And then lastly, of course, you can learn more about all of these products and duty to serve on fanniemae.com. And with that, next slide. We do want to thank you for joining us today to discuss our duty to serve plan and some of the ways we support affordable home ownership in underserved markets. And with that, I'll turn things over and open, I guess, the floor for any questions that you may have.
Did any questions come through the chat?
I don't
SME? No?
I don't see any questions. So if you do have a question, please drop it here and we will address those. One question, I know that you said you could find this on fanniemae.com. Is there any specific area or any helpful links that you guys might have that they can go to direct their information to the specific information that was covered today?
Yes, we do. We can definitely drop those links in the chat. Subject matter experts, if you could do so, that would be extremely helpful. Also want to give Yvette, Greg, Zach, Jeff an opportunity. If there are any key points that you would like to highlight, we have a few minutes before the end of the session. Something that we can provide our lender customers who've joined as key takeaways. Can they just unmute? Are they, Tony?
They can raise their hand and I can unmute them, or they can drop their questions in the chat.
Okay. And I guess the subject matter experts, since you're panelists, you can just unmute yourself and speak.
Yep, sure. So I'll kick it off. So this is Zach Ragland. For manufactured housing, I included our landing page for manufactured housing financing. Please make sure that you check that out. There's a ton of resources, trainings, case studies, that are up on that page. One of my favorites is that, we get a lot of feedback that titling is always an issue, since you have to convert the title to real property in order for us to provide the financing. So we have a state by state titling guide on there that's super helpful. We also have, of course, all the detailed product guidelines and requirements for, both our standard product, which covers single wide, and standard manufactured housing, as well as MH Advantage, which both Stephanie and Artesia touched upon on here. Want to stress that, you don't need to have any type of qualification or pre-approval to do manufactured housing with Fannie Mae. It is open to all of our lender customers. And, it really does represent the most attainable and affordable means of housing. So, we're always extremely excited and supportive of any questions that you have and any developments that we should be aware of.
Thank you, Zach. Any questions for Zach? Feel free to raise your hand. And Tony, if you can, just unmute. We don't have a whole lot of attendees. If you can just unmute everybody. I don't know whether that's a feature.
Yes, it is. So I'm going to unmute everyone. So please feel free to ask your questions.
Hi, this is Jeff Seidelman from Fannie Mae as well. I wanted to just chat briefly about our homestyle product. One of the really unique things about homestyle renovation is it allows you to finance the purchase of a home and improvements that you're going to make to the home in a single mortgage loan. And the loan amount is actually based on the value of the home, assuming the improvements are completed. So it uses something called an as completed appraisal. So we definitely are seeing borrowers using this product to buy fixer-uppers that might be worth $200,000 in their current condition, or $300,000 after they improve it, after they add, fix the roof and modernize the kitchen, et cetera. And the loan in that case, even though you're buying the home for $200,000, since your plans when an appraiser looks at it, say, oh, when these things are done, this home is going to be worth $300,000. The loan amount is actually based on that $300,000 figure. So just wanted to point that out as a kind of really a unique feature of this loan. Thank you.
Yeah, and I can jump in real fast. I put in the chat for those that are interested in sort of shared equity. We just earlier this year came out with an e-learning course, which I think is a great sort of start to get sort of foundation of all of the things that are required for doing community land trust lending. So I know right now there's a lot of sort of buzz out there about shared equity in general, but if you're interested in that, that's a great starting point to take that course. Obviously, you can reach out for us for more training and resources. Thanks.
Thank you, Greg. Thank you, Jeff. I don't know if Yvette is on or not, if you had anything to add. Nope. Any issues or challenges that you face in the market today? We'd love to get your input. We'd love to get your feedback. What else can we be doing to help you serve more borrowers in these tough to serve market segments? Lori, go ahead.
Hi. Yeah, thanks, Sharmila. I was just going to add and tag on to something that Jeff was saying about the homestyle renovation program. I think it's really great to know that a lot of realtors are not aware of this program. So as loan officers, or if anybody's on that, talks to their real estate agents, get them educated on this program, because it's a great selling feature. And I've got a couple of real estate friends of my own, and they are not aware of this program existing. And I think that is part of the issue, and, just not knowing about it. So let your real estate agents know as you're talking to them. Maybe they can partner with you in this.
Thank you so much. Okay, so as a reminder, I want to let you know that we will be sending out a follow-up email tomorrow. There won't be a recording attached, but I will include all the links that have been shared in the chat. And I will also include the contact names for the folks that have been on the call today, so that you will have a resource to contact directly. So Sharmila, I'm going to let you finish it up.
So we do have a post-webinar survey, and we'd really love for the attendees to take a couple of minutes to fill out the survey. Let us know how we did and if there are any particular areas, topics that we can explore with you in the next webinar. We'd love to get that feedback.
Excellent. Yes, please do share that and answer those post-survey questions. Fannie Mae is always here to help the lenders that want to be your resource, so please reach out to them. And thank you so much for stopping by today. Everyone at Fannie Mae, thank you so much for the excellent presentation. We really appreciate you being such a big part of the Mortgage Collaborative, and just always so willing to engage and ready to assist in any way that you can. So thank you very much for that.
Do they have access to the survey? Can you see it? I just want to make sure that it's just a couple of questions. You do not see it?
We
Our
can
teacher-
put the follow-up if you'd like.
Yeah. Can we turn it? When we go back and get to that slide, is there a way for us to get the attendees to access the survey? Our teacher, do you know?
If it's sent out, I'm going to drop a short URL in the chat, and that'll take you to the survey.
Excellent.
Yes. I know a lot of folks have dropped. We really appreciate the survey. Thank you, everyone, for attending. Thank you to TMC for collaborating and partnering with us on this webinar. We hope the attendees found the webinar valuable. Thank you.
Thanks so much. We appreciate it. Everyone have a great day. Bye-bye.